Hello Internet, welcome to Making Money. My name's Eric and this is your Daily Dollar, our financial segment where I give you one financial lesson every day to help with your money goals. Yeah, so we've been talking about investing lately. In fact, yesterday we went over the basics of investing, the things that you want to keep in mind when you start getting into investing. And again, when we talk about investing for the sake of this video, we are talking about investing in the stock market. There are many ways to invest. There are many different things to invest in. And as you grow in your financial journey, we'll talk about a lot more of the magnitude of things that you can invest in. But for now, we're talking about stocks. So yesterday I gave you 6 things to keep in mind. We're going to start going through each of those individually and kind of digging into them a little bit. So today, the first one we're going to go over is your investing objective. Your investing objectives are going to be core to what you're going to be doing with your accounts. Much like we started this channel with determining what your financial goals are going to be, having a clear understanding of your objectives in investing keeps you on a path, and it makes you reassess and make sure, am I doing what I should be to achieve my objectives? Now, in order to have objectives, we have to figure out what our objectives are, which can be more difficult. And again, this is going to vary so much from individual to individual, but I'm going to give you a very, very basic outline that you can start using to look at, okay, what my objectives are going to be. So let's think of investing right now, or your investing objectives on a sliding scale, all right? One end of that sliding scale is going to be income investing. The other end of the scale is going to be growth investing, all right? Now, income investing, think dividend income, all right? This is small, consistent payouts that companies pay out to shareholders for holding stock, all right? This would be the far end of income investing, dividend investing. And we'll get into dividend investing more. We're not going to dive into it too deep right now. But just keep in mind that that's what I'm talking about. Steady, reliable income. Okay? On the other hand, we've got growth. Now, growth investing is much riskier. You're relying on capital gains from stock growth. So when you buy a stock at one price, it goes up $20, you've made $20 on that stock. That is on the far growth side and is riskier because, we think stocks are going to go up. You buy a company thinking, okay, I think, they're going to do good this year, or their industry is going to do, the sector is going to do good, and we're going to go up. Well, that might not happen. It might end up going down. You might lose money on this investment. It could go terribly wrong. The company could go bankrupt and you could lose your entire investment, especially if it's a more risky stock to own. So growth. Now, the positive end of growth is obviously you can make more money in growth when it goes well for you, but you also have a higher potential to lose money. So again, higher risk. So that's your range, all right? And when I say it's a sliding scale, it really is a sliding scale, all right? Your objectives could be anywhere from income to growth in any point in between, depending on what you're looking for. This also may depend on where you're at in your investing life, your financial life. If you're close to retirement, chances are you want to take less risk, and income investing might sound like something that you'd be more interested in. On the reverse, if you are just starting out and you have a long track to go before retirement, you can afford to take on a little bit more risk. Now, this doesn't mean you have to or necessarily should, but you are able to just because time is on your side. And likewise, if you are, close to retirement, this isn't to say that you can't absolutely take on, additional risk. It's just, it is riskier because you don't have as much time to bounce back if something goes wrong. So that's what we're talking about today, just this sliding scale. And we're going to add one more point on top of this that's kind of disjointed to this scale altogether, and that's trading. All right. So when we talk about trading, we're talking more about speculating. All right. This is the buying and selling, either day trading during the day, trying to get dips and, valleys and mountains. And, you're trying to catch waves as they're going in the stock market. Trading could also be for a larger period of time. Day trading is just a very popular way of speculating. And I think of trading as a separate form or a separate goal than income or growth. Just because it tends to take on so much more potential risk, with the potential of having so much more reward behind it. That being said, anytime you do any sort of speculating, we're not talking about investing, and the best way to think about speculating versus investing is speculating is looking for those quick, big wins. Investing is putting money in for the long haul, whatever that may be for you. But I wanted to point this out because it is still an area, but it is a much riskier past growth, in my opinion, and it's kind of its own little thing. So you could be looking to start to get into some day trading. That could be your objectives. Just be aware that when you put something in, be prepared that you could lose that in its entirety. So again, when we invest, we're investing with extra money that we have. This is after we've put together a savings fund. We've got our emergency funds. We've paid off debts. Things are taken care of when it comes to our expenses. The extra money we have now goes to investing. And obviously, the more you can put towards that, the better for your long-term goals. But that's it. Objectives. Start thinking about where you fall in that sliding scale, and start determining, okay, how much time are you looking to invest? How much time are you also willing to put into your investments? Do you want to be day trading, doing this every day? Do you want to buy and then wait and not have to touch it? Keep those things in mind. As we go over the next few videos, you'll really start to kind of flesh out that objective. But for now, those are the basic things that you should be thinking about. And again, I should point out, I'm not a financial advisor. And I'm not going to, the advice I give you here is more educational than anything else. I can't legally give you any financial advice because I do not have the creds to do so. But this is information that I've collected over my investing, over the information and then knowledge I've gathered from other people, and a ton of research that I've done into this. So hopefully this has helped today to kind of get you started. Interested in hearing, what is your investing objective at this point? Do you have one? Have you been investing for a while and don't have one? I do see that a lot too. Some people are like, I just want to grow my money. I just put it in, I invest. So leave that in the comments. Love to hear it. As always, if you guys are enjoying these videos, feel free to subscribe. You can hit me up on Twitter if you'd like to chat, and I will see you guys tomorrow for another video. All right, guys, what's up?